So not only is there a distrust in the media, but there are more people now who don't believe anything that the media has to say. So there's a mass distrust brewing in the media, and that's the largest segment of all Americans.
Welcome to Gold Silver Pros.
Everybody, it's Rob Cancel, �々𝙀𝙊.com. This is your weekly market wrap up, this time on Tuesday, October 24th, 2023. Welcome, everybody. This is the week before Halloween. Can you believe it? We're almost there to All Hallows Eve. Fun time of year. Love the trick-or-treating. We're going to do a little bit differently today. We're going to talk about what's going on in the world. I'm not going to go over the economic data as much because there's not a lot going on. It's kind of moving sideways. Production overall is down a little bit. Wholesale inventories are up. No big news on that front. Housing is a mixed bag between housing starts, which are down, and home sales, which are slight tick up. But I thought we would focus more on just important data points within the economy and what that means, as well as a couple of big stories. And then we're going to get into the gold and silver part of the program. So I want to talk about this story. This is from Zero Hedge. Trust in mass media craters to record lows. Americans wake up from the matrix. And you can see here, there was a study done by Gallup, and right here front and center in this chart, we can see that Americans' trust in mass media from 1972 to 2023 over the last 50 years has fallen quite a bit. Those who trusted a great deal or a fair amount has fallen down to about a third. It was 70% in 1973. That was a year before I was born. People generally believed the evening news, and they believed what the newspapers told them. But that has steadily fallen. The percentage of not very much has risen from about 20-25% back then to about 32%. And none at all has surged from almost nothing back in 1973 to almost 40%. So not only is there a distrust in the media, but there are more people now who don't believe anything that the media has to say. So there's a mass distrust brewing in the media, and that's the largest segment of all Americans. 40%, a plurality, don't believe anything the media tells them. That is a huge difference from even 10 years ago. Look at it in 2013. Most people still had some belief in the media, even after 9/11 and after the last crash. There was still some belief in media, but the last 10 years in particular has just destroyed people's belief in what we're told. And there's a massive political gap in the trust of corporate media here. You can see Republican, Independent, and Democrat. Democrats still have a great deal or fair amount of trust. That would be this green line here. It's mostly made up of Democrats. About 58% of Democrats have a fairly good belief in the media, and that's because the media tends to be very left-leaning a lot of the time and speak to those types of narratives that the Democrats may have a predilection to agree to or naturally agree to. Everybody else, though, it's very low. Independence is down to 29%, and this is going to be big in the upcoming election. The mass media and the liberal side has lost the independent. The independent is, I think, going to side with either libertarians or Republicans in the upcoming election. You can see the poll numbers out that basically reflect that I don't think anybody thinks that Biden has another chance of getting reelected. People are scared of Trump and his domination on the Republican side. And it seems as though the independent has swung over to that more conservative side. And of course, the Republicans bring up the rear. Only 11% make up that great deal, fair amount of trust and confidence in media. So Republicans really don't. And it's no surprise when you have the media constantly beating on conservative viewpoints and taking a much more obvious liberal view, maybe that they have ever in history, that the people that feel alienated from that wouldn't trust the media. But I think the most telling thing are the independents who are basically saying, yeah, we don't necessarily trust you either. Maybe you're too left-leaning, or maybe you're not objective enough, or I don't know what all the reasons are behind this. There's a quote from Gallup that said, this low confidence reading for the fourth estate comes at a time when trust in each of the three branches of the federal government is also low. So basically, people aren't believing the narratives. This is a really interesting chart. In fact, I'm going to blow it up just a little bit for you. There are basically 6 entities that control most of media. And this is something that has been talked about for many times in alternative media. Disney, 21st Century Fox, AT&T, Comcast, and CBS own most media outlets, including Fox, including, whether it's right-leaning or left-leaning, or whether it's different languages like Telemundo, or whether it's sports, you know, or whether it's business, or whether it's more kids with Disney, Pixar is in there, Touchstone, Lucasfilm. I mean, media, this is control of all types of media, not just your evening news, but movies, television at all levels, Golf Channel, whether you're watching sports or kids programs, these entities really control the messaging. And that is basically, I think, why people have a distrust, because it's the same message over and over that tends to honestly alienate a large segment of society, and it makes complete sense. And I'm not going to fall on one side or the other here. You know how you guys know how I am with the right-left argument. I think it's the Hegelian dialectic. I think it's all BS. I've been an independent my whole life, because even when I was 18, they asked me who I wanted to register to vote as. I said, I didn't say Republican or Democrat, I said independent, because I've never believed in this. I've never believed in the media driving what people should think. And I've never allowed myself to be completely swayed by some talking head on TV, or even a movie, or even something like that. I've just always been able to think for myself. But there is a lot of control, and people don't trust anymore. That's what happens when you have a few entities that really control media. People don't trust it anymore. Moving on to our second big story before we get into gold and silver, I wanted to point out in a study here by the United States Census Bureau, income in the United States. Now, these are 2022 numbers, but it's interesting because I'm going to lead into real estate and why real estate's really in bad shape, and why on Thursday's video, I'm going to come back to real estate and compare it to the other investment classes like gold, for example. We'll bring it back to gold, but we're going to talk about real estate a lot this week. We're going to talk about treasuries and bonds, because there are stresses in these markets. And I've been saying for about maybe 7 or 8 months now that real estate was rolling over. And I had a bunch of conversations with friends and other people this week, in which, and on the Spaces on Monday, Sound Money Mondays, where I talked about how the real estate market is a lie. Foreclosures are being covered up. The real story is not being told to you. I don't trust the data that's coming out from like the National Association of Realtors, or a lot of these information brokers in real estate. I don't believe the data. Well, part of the problem is that not all states are public reporting states, but even the ones that are, I just don't believe the data is the way it is. When you look at income disparity, when you look at wages not keeping up with inflation, you know that people can't afford housing. Well, anyway, here's some real data behind that. It says right here, a highlight from the census: real median household income was $74,580 in 2022, a 2.3% decline from the 2021 estimate of $76,330. So income in the average household actually went down last year in 2022. Well, what does it take to actually own a home? Well, here's a really cool graphic put out by visualcapitalist.com. And you can see here that the national average is, it says a person earning, right down here, person earning 100K a year would not be able to afford the minimum mortgage payment to buy a home in nearly half of America's 50 biggest cities. And the median price of an American home in 2023 across the board, just averaged out, is $371,200, requiring an annual pre-tax salary of nearly 100K to pay off a 30-year fixed rate. We're not talking about 15-year or shorter term. To max out and do a 30-year, you would have to have a salary of 100,000, and a person earning 100,000 couldn't actually buy a home in half of the cities. So when you average out the cheap and the expensive areas, a person with 100,000 or a family with 100,000 could have a home, but really only in half of them in real life. But how many people actually make 100,000 could even qualify for a loan for the average sized house? Most people can't, because the average median household income is $74,580. Not even half of the people can, and then more because this is median. So you go past the median until you get to 100,000. It may only be about a third of people that can actually afford to buy a home now. And that's why I continue to harp on the real estate market and say, guys, this is overpriced. It's not that we just need more homes. We do, but we need more affordable homes. And that means that real estate has to come down. There's no other way around it. And when you talk about all the job losses going to come during the next recession, it doesn't just need to come down to that $74,000 income according to the census, because the average income is going to go down during the next recession. Less people are going to have jobs. You're going to have less qualified people buying homes. So homes have to come down in price to the point which people can actually afford to buy them and live in them and not have it destroy their budgets. The housing market is a complete and utter mess. And that's really the two big stories of the week that I wanted to bring to you, that if most Americans' greatest assets are house, and if you're sitting on that and expect that to get you through and get you to retirement, it's not going to happen during the next recession. You're going to lose a lot of your wealth when the real estate market comes crashing down. And also want to point out, you can't necessarily believe what the media tells you, and people don't believe in what the media tells them. And a lot of what the media tells them is to buy a home, get a job, buy a home, go to college. Look at how much colleges cost. Look at how many new students can't find jobs. Look at how many people can't pay back their student loans. Look at how many people can't afford the average house. Are you getting the picture? People don't have the right assets, and they have too much debt, and they don't have enough income. This whole thing is going to fold in on itself. All right, on to gold and silver. We had some interesting things happen in gold. And before we get into the data, I wanted to point out that I've been talking to people at various parts of the world, not only other retailers, because I'm a dealer in gold now. I've been talking to some wholesalers, some other retailers across the United States. I've been talking to people around the world, and people are selling their gold. Now, I did say that gold was in a shortage, so I really have to qualify my statements. Some people are buying a lot of gold. Most people are actually selling a little bit of gold. So people that may have had a little gold are selling it to keep up with inflation and to make ends meet. But big entities are going and gobbling up large amounts of gold, and that's taking a lot of gold off of the market. It's a tale of two markets. You've got the richer people that can afford it and the people that can't. And most people fall into the can't category. And if you're at this point in time, you have disposable income, and you're looking at real estate, and you're looking at treasuries, and you're looking at the economy and going, this is all going to come down. My wealth is going to come down. Where would you put it? Gold might be a place that you want to go to, but you don't want to wait too long, because the big players are gobbling up the easily found gold. They're starting with the sovereign coins, and eventually they're going to go to bars, and it's going to become very hard to get. All right, now on to the market. We've had a little bit of frothiness in the trade in gold, not too bad. As we're looking at yesterday's data well, actually, we're looking at 19th day. Ooh, they have not posted Monday's data. Oh, there we go, 24th of October. All right, as of 24th in the morning, 370,000 open contracts on December. December is still the most popular month, but you can see February building up here as we get closer to December. Contracts will roll off into February because it's a futures market. What I always pay attention to, and the number I look at primarily, is how much business is going to London. How many people are pulling up stakes in the COMEX in the US and trying to go get delivery in London? There are 3,134 contracts on Monday's data. That's yesterday. On Friday, we had 4,092 pull up stakes in the COMEX and go over to London. On Thursday, we had 5,388. On Wednesday, we had 5,218. And on Tuesday, we had 2,343. That's an average of about 4,000 contracts a day. So about the last few weeks, actually the last couple of months, about 20,000 contracts a week of 100-ounce gold are being pulled off the American markets seeking delivery in London, or seeking exposure to that OTC market, ostensibly where they could get access to that delivery at some point in time. People want the gold. So when I tell you gold's coming off, you see it here on the industrial side, but you also see it in retail where the popular sovereign coins are going into shortage. And I keep checking every day. I check the stocks of my wholesalers, and they don't have a lot of the popular coins. And when I talk to them, they say, well, we're sold out of a lot of the popular ones. But I do have some in the store now because local residents are selling some to me. And that's just the dynamic of the way the market is working right now. The big hands are coming in and gobbling up gold, but some people are selling because they need to, to pay bills because of inflation, especially people that are retired. The people that have been selling to me have been people that have good jobs but are looking for a little extra cash, and people that are retired and need the money to live and are basically telling me inflation's basically killing them on their fixed income. Their fixed income's not cutting it, so they're selling a little bit of gold and silver. So that's what's happening. As we move over to the ETFs side of gold, we can see here, again, outflow of gold. The big players are taking it off to the tune the last 4 weeks of 2.6 million ounces. You guys have seen this chart. I don't need to go over it in detail every single time. If you're new to the channel, just know that for about 2.5 years, gold has been coming off the world gold markets as represented by the ETFs and COMEX here in the United States. Same thing with silver. I'll just fast forward to this chart. Some has come back onto the COMEX, but overall a net loss between COMEX and the world markets and silver as well. Now, silver is acting differently right now than gold. Gold is what people are going for right now. People are selling silver a little bit more than they are gold. People are going more to gold because of the war and things that are going on. And gold is your primary safe haven. Silver will come after. Silver will explode after it's confirmed that gold is going to move up. Now, gold did have a nice move up last week. It's retracing just a tad bit this week, falling down. You know, it had a really nice move last week. That's to be expected. The markets don't go straight up. You know, they'll go up and pull back a little bit. And long term, we could have a pullback in gold, depending on what goes on geopolitically and with the wars and when we hit the official recession. But I suspect demand in gold is going to be pretty high physically, and the derivative markets are going to maybe trade down just a little bit. But silver's not ready to pop just yet, and I'll tell you guys when it's ready. All right, moving on to the silver futures, a little bit less frothiness in trading, relatively speaking, in silver. Gold's the more interested commodity right now because, again, it's the asset of last resort. It is the fear trade, not quite spilling over into silver just yet. So in December, you have 96,959 contracts. That's the month in which most of the trade is taking place, and that's the month which is, all intents and purposes, is going to determine the spot price that you pay when you go buy it if you're a physical holder. Looking at the EFPs in silver, they've been more muted, 125. Now, these are 5,000 ounce contracts versus 1,000 ounce gold. So there's still a lot of silver being being moved over to London. On Friday, an astounding 2,440 contracts. Multiply that by 5,000. And what is that? 100,000 ounces of silver on Friday that people were looking for in physical format went over to London. 352 contracts Thursday, Wednesday, 533. So not as many going over to London, but still quite a few. And if you look at the pricing for silver, based on Monday's data, it was down about 29 cents. Last Friday, it was up 47 cents. So the metals traded up last week. I can go over gold here too on the settlements chart. You'll see the same thing. It was down $6.60 on the December contract on Monday, but last week it went up. It was up 13 bucks on Friday, up Thursday, 12.20. That was because of the negative news cycle. So the negative news cycle drove a lot of interest and a lot of demand for gold and silver in the derivative space. But the physical demand on gold is really what's outshining the physical demand on silver right now. And that's because of the fear trade. Now I wanted to go and take a look at a gold chart. It looks like they're not going to let me see a gold chart. So we'll just go to the gold price and go to my traditional gold charting. And I wanted to look at a little bit more of a long-term chart in gold. And we're going to blow this up just a little bit. Gold price is not going to be, so we'll just blow it up this way. But in any case, if you look at the gold chart here, look at what we've got. We've got a long-term uptrend. Okay, we had a high here. This is a 2011 high of about 1,900 bucks. Came down. There was some disinterest. Came back up, and it stayed up. It stayed up since the pandemic. Actually, it stayed up since about 2016, where it's been going up. So we now have about a 7-year bull run in gold. And people are a little bit frustrated because here on the end of the chart, you have a little bit of upward movement here. A new all-time high in 2020, I think of about 2,075 in gold. And it hasn't retouched that yet, but it's staying up. That's the key point. It's staying up. And as we get further into the news cycle, think about it. Let me just speak to you on screen here for a moment. You've got fear and mistrust. These are the highlights of today's weekly market wrap: fear and mistrust. You have fear of what's going on in the world. You have fear of the war. You have fear of uncertainty. And you've got mistrust of government and mistrust of media. These institutions that people have depended on for a long, long time. And the people that grew up with media don't trust media. And the people that grew up in this governmental system don't trust the government. That's big. And so when that happens, people are going to rotate into safe haven assets like gold. But we haven't seen the stampede, folks, because when people figure out they can't afford homes, and they're starting to figure it out, and when those foreclosures start happening, you know, I worked in the mortgage industry for a number of years as an auditor. I audited, not only when I was at Ernst & Young, audited a bank's portfolio of loans. I went and worked for a mortgage servicer. I worked for the largest subprime variable rate mortgage servicer in the US. And when I did, I worked in, I audited their real estate owned REO, you know, once they take the property back, if it's a foreclosure. I worked in foreclosure, bankruptcy, all these, and I looked at all that data. And what happens during times of stress is people give up their homes. They can't pay them. And they have to walk out. And it goes through either a bankruptcy or a foreclosure process. And then it goes into real estate owned, and these servicing companies or the investors eventually have to take these on. The new rules as they're written, a lot of these rules require the servicer to make up for losses. Why? Because during 2008, 2009, when the last real estate crisis hit, the whole Lehman debacle, investors got hit and there was not enough money to pay them. And I was involved in projects trying to figure that out. And that just, screwed up the whole market, and the mortgage-backed security market almost went under, almost taking the global financial system with it. So along the way, rules were made that put the onus on certain people to take responsibility. So servicers are on the hook potentially for a lot of these losses, but the servicers don't have the money. They don't actually have the asset. They're just servicing. So they're not going to be able to be on the hook for this. So you're going to see bankruptcies not only in banks, but in servicing companies, title companies, real estate companies are all going to go bust during the next recession. And the prices of real estate is going to come crashing down. And that's going to freak out a lot of people, because people in the United States, a lot of them, place value in their homes and in their land. And that's all starting to come crashing down. On Thursday, we'll talk a little bit more about that, and also the treasury market and why gold might be your best asset right now. But right now, looking at the data, physical gold demand is very high, but it's the strong hands taking it, the rich taking it. It's not the everyday person. A lot of smaller holdings, people with smaller holdings, are selling to retailers like me, and they're selling out. And like I said, this is going on around the world. I talked to somebody that works in Singapore, and they're like, yeah, we bought a lot of gold back this past weekend in our stores. And I'm like, really? We're doing that in the US too. And so gold dealers right now have a little bit more gold, than they've had. I've got more gold in stock now than I've had, since I opened a couple months ago. And I have it in a couple different forms. I have it in bars and I have it in rounds. You can go to our website, www.goldsilverpros, and see what we've got. By the time this video goes out, hopefully I'll have up some of my new stock up there. So we've got a little bit more gold, but that's just like some popular coins and things. But overall, that market's actually in shortage because big hands are coming in buying huge swaths of it. So in other words, think of it this way. The people that are pretty well off and generally are ahead of what's going on, they listen to the news and they're well connected, they're buying gold hand over fist. And the people that are selling are the ones that had some, but inflation is just killing them. And maybe they can't get out of their homes because they're underwater. They, nobody's buying. So they're selling, a little bit of gold. And that's what's happening right now. So gold is helping them in times of stress. But for you guys that don't have any, and you're counting on your real estate, or you're counting on your automobile, or your antique car, or your Pokemon collection, or whatever it is, people aren't going to buy that stuff in a recession. Those values are going to come down. It's all going to be moved over into gold, into silver, but silver is going to come second. For those of you that, we had a tweet out this week talking about silver squeeze, and it was like, is silver squeeze dead? No, it's not dead. It's gone underground. People are still collecting silver, but right now gold is the choice right now because of the uncertainty. And, I was also having conversations with some friends, and we talked about this on Spaces. If you guys haven't listened to that Spaces, on Monday, hosted by Metal Miners Club, and I'll repost it every Monday morning at 10:30 a.m. Central Time. We do a Spaces for about an hour and a half, and we talk about what's going on in the economy. We talk about honest money, sound money, and what this group is doing to enact legislation to make gold money again in the States. And I'm, a part of that. And we hosted Spaces, and we were talking about, people were like, what's the next step, Rob? And I said, well, the next step is going to be, we've got hot wars, but they're popping up in certain areas. They're hot spots, if you want to call them that, instead of hot wars. But what's going to happen is we get deeper in the economic contraction, because China is a big mess right now. And as the dollar starts to collapse, what we talked about, China is dumping treasuries at the fastest rate ever. They're actually in their liquidation phase. People thought if China ever liquidates the treasuries, there goes the dollar in the treasuries. Well, they're doing that right now. And we've been talking about it all for like 15, 16 years. It's finally happening. So we're in the quickening phase, the very end. I've been saying that for about a year or so. We're in the quickening phase. Things are happening faster. China's dumping all of its treasury debt. Japan's already dumped a bunch of it. Russia dumped all theirs a couple of years ago. And what's happening is the treasury auctions are starting to fail. It's not making the news unless you know where to look. But 2 weeks ago, we had a really bad treasury auction. And so the dollar is going to fail sooner rather than later. And when the dollar fails, I'm afraid the whole world's going to break out into a series of hot wars. And then when that happens, then you're going to have a big economic collapse. And then you're probably going to have these various wars and other things going on. I think those are next steps. I can't give you the exact time frame, but I've been saying since 2018, it's probably going to happen around the middle of this decade. So we may have another year and a half, maybe two. Some of us are saying between 1 and 3 years. It's hard to know exactly, but we can see the milestones and we can see what's happening. So I'm going to say it again. There's not a whole lot of time left. if you're trying to take a position in precious metals, but go beyond precious metals. I mean, do your own research. I'm not your financial advisor. But you may want to prepare. I'm preparing, let's put it that way. I prepared a little bit extra food, self-defense classes, things like that. You know, I'm doing a lot of networking. Before I come into the shop every day, I open at 11, my local time. I go out and I network. I try to find a network meeting. I was just at one this morning, and I'm trying to network. And what do you know? What do you know? What do you know? What do you know? To try to build that network, because eventually all your stocks of whatever you have, even your gold, could run out, and it's your network that you're going to depend on. So it's shelter, it's family, it's being right spiritually, it's having networks, it's having food and water, and it's having some gold and silver, most likely, as your safe haven assets. Those are my recommendations, but I'm not your financial advisor. You got to do, you know, what you think is best. But I think the data is becoming more and more clear. People distrust. That distrust leads to a little bit more chaos. We're heading into the recession. Who knows whether we can trust the media reports when we head into the recession? I think we're already in one. As people pointed out, we're in the recession, headed toward Great Depression, I think. I agree with that. I wrote about that in my book. And we're probably going into an era of hot wars. And hope to God the United States doesn't jump into these, but it's got 2 aircraft carriers, and it's wanting to fund an extra $110 billion to these war efforts. So I think it's a foregone conclusion the U.S. is going to be very active in that set of wars. Does this lead to World War III? I don't know. But certainly looks like we're going into a period in which is different than the last 20 years. And there's going to be a lot of instability. So now is the time for you to plan. Whatever you're going to do to plan, now is the time to do it. All right. That's going to wrap it up for today's weekly market wrap up. Thank you guys for staying tuned to the channel. Yesterday, I kind of took a day off, had a long day for me, but wanted to come back on Tuesday and do this for you guys. Appreciate you guys joining, sticking with the channel. Remember, go to www.goldsilverpros.com, Gold Silver Pros, put www in front of it. We have a bullion store there. If you're interested in the bullion, I just ask that you take a gander at what we have. We also have a sign-up list on the volume pricing page. If you don't see anything there and you want me to get you something, or you want to buy a couple ounces of gold or 1,000 ounces of silver and you're looking at some volume pricing, check out the prices there, or just call me and see what I have. Sometimes I have deals that aren't there. Talk to me about it and I'll see what I can rustle up for you. I have a lot of contacts in the industry. A lot of times I can find you a deal that may not be listed on the webpage. And it's a simple sign-up form. I took the check mark off of the address box. You don't have to leave that right now. You can just leave me an email or a phone number, however you want to be contacted. I'll reach out to you, and if there's something that you want, I'll see if I can find it for you. All right. Thank you guys so much. I appreciate you so much for your support. Till next time, it's Rob Kientz, goldsilverpros.com.